It is 4:40 p.m. on a Friday. For Maya, the finance manager of a medium-sized construction firm, the weekend is 20 minutes away. That rhythm is broken by an urgent request. The company's largest steel supplier apparently needs a £186,000 transfer sent to a new bank account. The deadline is 5 o'clock, 20 minutes from now. The request is attached to a real debt. The invoice number, the project name, and the total amount are all accurate. If the payment isn't confirmed by the deadline, Monday steel delivery is canceled, potentially stalling a project with 40 workers already booked and waiting. Maya is left with a binary choice. Choice A, approve the payment immediately to protect the project. Or Choice B, pause the transfer for independent verification, even if it causes a disastrous delay. On the surface, the request looks legitimate. But in a high-stakes environment, the most convincing details are often the ones that require the closest scrutiny. Maya must separate the psychological pressure of the deadline from the logical evidence. The details are precise. The sender knows the exact purchase order, project site, and amount owed. However, possessing confidential information is not the same as having authority to change a bank account. If an outsider gains access to a supplier's email account, they can read every past invoice and delivery schedule. They don't need to forge a document. They can simply use the real data to make a fraudulent request look like an established transaction. Accurate information proves that the sender has access to the supplier's records. It does not prove that the sender is the supplier. Several internal factors are pushing Maya towards Choice A. The first is normalcy bias. The company has processed bank changes via email before without issue, making this urgent request feel like just another routine administrative task. Then there is authority bias. Maya's project director is breathing down her neck, making it clear that he prioritizes the Monday delivery over the finance department's verification protocols. Finally, there is the pressure of sunk costs. With equipment already rented and 40 laborers scheduled, the fear of wasting those resources makes it harder to pause and question the request. These factors combine to make the cost of a delay feel immediate and painful, while the risk of fraud feels abstract and distant. Maya spots anomalies. The reply to address has one extra letter, mimicking the real domain. Also, the email originated from a foreign country, not Britain. Finally, the new bank details appear in a darker typeface, as if edited into the original file. By 4:55 p.m., the channel of communication breaks down entirely. When Maya attempts to verify the change, she receives a text from the supplier's known mobile number warning of a hack, while a simultaneous email from the company account claims the phone was stolen. A single inconsistency might be an error, but when these anomalies accumulate, they form a pattern. By the time the contradictory messages arrive, the credibility of the request has already collapsed. Maya chooses Choice B. She pauses the payment despite the pressure. On Monday morning, a verified call from the supplier confirmed that their email had been compromised. Her decision prevented a £186,000 loss. This choice was supported by the principle of claim separation. Maya recognized that the fact that the company owed money was entirely separate from the claim that the bank account had changed. Each required its own independent proof. She also adhered to a standard verification process. She ignored the contact information inside the suspicious email and instead reached out through a previously established channel. Verification is only effective if it comes from a source the sender doesn't control. This is a matter of proportional caution. On this scale, pausing a legitimate payment creates a temporary inconvenience, but sending money to a fraudulent account is an action that cannot be easily undone. When one mistake is reversible and the other results in a permanent loss, a higher standard of evidence is required before moving forward. This same reasoning applies to personal security. Whether it's a request to update a password, an emergency plea from a relative on social media, or a landlord providing new bank details. Urgency is a tool used to bypass your logical defenses. It is designed to make you prioritize speed over accuracy. The most effective defense is to step out of the pressured environment. Slow the process down and verify the request using a channel that was established before the crisis began. A brief moment of discomfort during a delay is a small price to pay to avoid a permanent disaster. Urgency is the reason to become more careful, not less.